right. Well, welcome to the very, very first Watson CPA Group podcast. We have absolutely no idea what we're doing.
It's true.
No clue. We're recording stuff. We know what we're talking about because we're smart. But when it comes to wires and microphones and all that stuff, no clue. So hopefully this goes well. Joey, you feeling good?
I am feeling good.
We talked about names earlier during our test run. So we're going to go with Joseph today, right?
Yeah, let's do it.
All right.
A little more professional.
Joey's a part of the family, so we call him Joey. But when he's Joey the professional, he's Joseph.
When he's behind the mic,
When
he's
behind
Joseph.
when he's rocking the mic. Well, my name is Jason Watson, Watson CPA Group. Amanda Rowles
Hello.
is with us, business development extraordinaire, and Joseph, sorry, God, that's going to slip out a lot.
Okay.
Joseph is a tax accountant for us in Pod C and also on the business development team.
Yes.
Our podcast today, we're going to just kind of run through how we, launch an S Corporation, if that should be in the cards. And we'll talk about that as well, when an S Corp makes sense and when it doesn't make sense and all those things. We all have our little cheat sheet here, so we'll be able to hopefully stay on task.
We'll try.
So let's, the very first thing we have to look at is the entity itself, right? So, Joseph, talk to me a little bit about location. Like when you're on the phone with somebody and they're like, hey, I got this really cool business idea and I want to launch an entity. What's some of the considerations for location?
Well, depending on the state, some states S Corp, it's just, it has no meaning to them. They treat you just like a corporation. So, if you're in New York City, Tennessee is one, too, New Hampshire has one, too, then maybe an S Corp doesn't make sense because all the savings...
Well, before we get that far, sorry, let me just kind of tee it up a little differently.
Okay, I'm excited. I'm ready to go.
Yeah, ready to jump into why New York City, Tennessee, and New Hampshire kind of stink when it comes to S Corps.
Yeah.
But someone will call you up and they'll go, hey, I live in California, but don't tell anybody. But I want to form my entity in Nevada because I heard they have really good rules and no taxes.
And then I'll say, hey, do you work in Nevada?
Right.
So
when we're looking at location, what's some of your questions?
Right. Well, the first one, being where's the work being formed?
Okay. So where's your butt?
Yeah, exactly.
Mm-hmm.
Their physical nexus, what we would call it, or where's your butt? Either one works for that one.
The technical term.
Yes. And then there's also, the economic nexus. So, some states will come after you if you're doing a certain amount of business in their state, like California. They've got that bright line nexus. And then some states will just have a pleasure doing business in our state tax too.
Yeah. So before we get into tax, we're just talking about nexus, right? So some states will say, hey, you're located here, your butt's here, you're doing all the work here, we need you to register here. So, Amanda, let's ask you this question. Let's say somebody insists on being a Nevada corporation, but their butt and their work and everything is done in California. What happens then?
Well, we'll go ahead and we'll do it if they really insist, but we're probably going to have to file as a foreign entity where they are as well. They're going to have both.
Okay, what's a foreign entity? It sounds like international type
right,
stuff.
Alien.
Yeah.
So a foreign entity just means that the corporation or the LLC is domesticated somewhere else. So in this case, the scenario we just came up with, Nevada, but they're doing business somewhere else. They have employees somewhere else. So they're going to have to register as a foreign entity with that other state, meaning that the business already exists in another state, but we're also going to get permission to transact in this other state.
Okay, cool. What are some examples that we see every day? Who has to do that?
Most of the time, like Joey said, Joseph, it's California, because California has a lot of...
What kind of businesses do you see every day that have to do that, you think?
Oh, goodness.
I'm thinking Walmart, Best Buy.
Yes,
Whole Foods.
Amazon.
Yeah, maybe not so much Amazon. Well, probably Amazon now because they got warehouses everywhere and they're doing enough business everywhere. But, Best Buy, right? Great example. Walmart, great example. Walmart, based in Arkansas, as far as I know. Okay, Apple, based in California, as far as I know. But they have to register in every state because they do business in every state.
Yep.
Whether it's physical with bricks and mortar or whether it's economic, and we'll talk about that here in a second. So, yeah, so certainly if someone says, hey, I want to register in Nevada, that's where I want my entity domiciled, that's fine. We can still do that. And there might be legal reasons why they want to do that, right? They're getting some advice from an attorney who says, hey, based on your type of business, the laws are going to favor your business better in Nevada. So when you draft contracts, make sure that you say, hey, any adjudication will be done in Nevada. Make sure you try to absorb lawsuits in Nevada, et cetera, even though you're doing business in California. Unlike Walmart, let's say, who if somebody gets hurt in Walmart in Colorado, Walmart's probably going to be sued in Colorado. You're not flying to Bentonville, Arkansas to get your sprained ankle adjudicated.
Well, we hope not.
Yeah, that'd be bad. So we're looking at location, and that's a big deal because a lot of people think they can just file anywhere. Delaware and Nevada have just taken a cake on good advertising. Mm-hmm. Hey, register your business here. We have friendly business courts, all that stuff. It doesn't always work out the way people want, but if they're getting legal advice from somebody else saying, hey, it's best to be in Nevada or Delaware, sometimes a venture capitalist, especially like international domestic capitalists, will say, I only invest in Delaware C corporations. Mm-hmm. Okay, crud. So I guess we're going to do a Delaware C corp, even though I'm in California doing this thing. So sometimes, right, the golden rule, right? He who has the gold makes the rules.
Absolutely.
So if we have a venture capitalist with a big fat check and they're like, well, you're going to be a Delaware Corp, well, I guess you're a Delaware Corp, and all of a sudden you're going to have to also do a foreign filing in California or wherever the work is going to be done. So that's physical location. Let's talk about this economic stuff, Joey. What do you got over there?
Back to you.
How can you get tripped up on economic nexus?
Gosh, just the pronunciation of it or just the entire thing? Really, economic nexus. Okay, I got it. So really, that's kind of be where you're, performing the work or, where you have ties to the state. So you might not actually, physically have your butt there. But, if you're working remotely in another state,
Okay, so how they measure that? Sales.
Yeah.
Where the money is, right?
It's sales, payroll, and property. Those are the three apportionment rules that we typically go with, right? Revenue is typically the one that everyone gets tripped up on. And do you know what those are at all, at the top of your head?
For California?
Or just for most states? Most states follow the same rule, the 500,000.
Oh, it's
right?
all the same. Yeah, it's 500,000.
Typically. Every state's going to have a little different action on this. But if let's say Watson CPA Group is in Colorado and we have over 500,000 worth of revenue in California, now we trip their economic nexus wire and we have to file there as a foreign entity.
Right.
So 500,000 gross revenue. It doesn't matter if you have 500,000 expenses. It's not 500,000 net income.
Oh, bummer.
Okay, yeah, bummer. The other thing is, this is where you can really get in trouble, is there's also another rule where if 25%, and using California because they're easy to pick on and they're, like bigger than most European countries in GDP. So if you have 25% of your revenue sourced to California, so let's say you have 100,000 in total revenue for your business, and 40,000 of that's coming from California while your butt's in, let's say, Colorado, you will have California income tax nexus. So it's 500,000 or 25%. So anyway, so we talked about location, right? Physical location, venture capitalist type stuff. Mm-hmm. Maybe you have a legal reason to be somewhere else. Totally cool. Now we have this economic thing. And economic nexus, we tend to do that looking in the rearview mirror. Meaning, let's not just jump out and file in California until we actually have the 500,000 or the 25%. Why create a headache that doesn't exist, right? Yeah. You have plenty of headaches on your own as a business owner. Let's not add to them, right? So anyway, that's location. Talk to me, Amanda, a little bit about the differences between an LLC and a corporation in terms of the formation paperwork.
Sure.
In terms of maybe some of the terminology as well.
Sure. So some of the basic differences would be that an LLC typically is formed through articles of organization with your Secretary of State, whereas a corporation is formed through articles of incorporation. It's a small difference, but it does make a difference. An LLC can be taxed as a disregarded entity, meaning it can be reported on Schedule C of your personal tax return.
Correct.
Right?
So a single member LLC automatically is considered disregarded. Mm-hmm. Disregarded by the IRS means there's no separate tax return.
Right.
It's still going onto a schedule, but it's not going to have its own entity or its own tax return.
Whereas a corporation is going to have
Boom.
a separate tax return.
Done.
Yep.
Can't avoid it. Yes. Okay, so LLC versus corporation. A lot of people think LLC means corporation too, right?
Right.
You hear that all the time. I have a limited liability corporation. No. It's company.
Right.
Now, we tease lawyers out there that LLC stands for lawyer's likely choice, right? But it is a really nimble entity structure. So we have LLC, corporation. LLC has members.
Yes.
Okay. We sometimes will call them partners simply because if you have more than one member, you're filing a partnership tax return.
Depending on your state.
Depending on your state, yes. We'll talk about that in a second too. All kinds of good stuff. Absolutely. A little foreshadowing to the community property laws.
That's right. Precursor.
Yes. Born out of Spanish law for those really want to geek out on it. So LLCs have members, corporations have shareholders, LLCs have articles of formation
Or organization.
Or organization. Corporations have articles of incorporation. We have, what's some of the other like governing, documents differences? What do you got? Operating agreements, bylaws for corporations, and then operating agreements typically then for LLCs or okay. Yep, I agree with all that stuff. When would somebody want to be a corporation over an LLC? Joey, what do you think?
It depends.
And we're talking about just a garden variety corp, so no S election. Talking about a garden variety LLC. What are some of the differences, or why do you think someone might be a corporation?
So California brings one to mind too. If we're talking about the S or not, because they have the possibility to elect out-of-state disability insurance.
Right. So let's kind of give everybody a little bit of landscape there. So California, New Jersey, a few other states have this thing called SDI, state disability insurance. Sometimes you see family leave insurance as well, FLI. You see that occasionally. So if you're just a normal W-2 employee, you have to pay SDI in California. The answer is yes. So can you opt out of it as an owner? And what was the answer again?
Yes, officers of corporation can.
Okay. So what if I take my LLC and have it taxed as a corporation? Am I now an officer who can opt out of SDI in California?
No.
So there are some subtle differences there. Exactly. So these are little tiny things that we need to just make sure that we're exact on, right, as folks call up.
But back to the question about why we might want to have a corporation instead of an LLC. Depending on your state and the type of business you do, you may need to have a professional services corporation.
Right.
A lot of times we see that with licensed professions such as CPAs, medical doctors, attorneys, things like that. So.
Totally. No, you're right. And we'll get to that in 1 second. Another thing about corporations is just because of what's funding it, right? You might have a situation where someone took a 401k and they're using that to fund their new business venture. Right. That has to be in a corporation. So they take their 401k from their old job, they transfer it to another 401k trustee, and that trustee then directs that 401k to purchase all the shares of this burgeoning C Corp, and boom, we got a business funded by a 401k from a previous job. That has to be a corporation. It cannot be what we consider a disregarded or pass-through entity, which LLCs can be. So, yeah, or an attorney might be like, you have to be a corporation. That's the only way I'm going to sign off on this deal, or the golden rule, back to the venture capitalists, right? So sometimes you have some external factors that are going to dictate what the entity type will be. So, yep. All right, so Amanda alluded on professionals.
Right.
Are you a professional?
I am not.
You're not? Are you a professional?
I consider myself a professional. Come on, Amanda.
We're all professionals, just not after 5. No.
Yeah.
Amanda alluded to it earlier. So there's several professions: doctors, okay, lawyers at times, accountants at times. Depending on the state,
right,
they'll make you put a P in front of whatever entity type you are. Here in Colorado, Watson CPA Group, until recently, was a PLLC, a professional limited liability company. So even Colorado thinks we're professionals. That's awesome.
Right.
And in California, this exact same accounting firm would have to be a what?
PC.
A PC, right? Professional corporation. So anyway, yep, those are And that's going to be totally dictated, not totally, but typically dictated to the Secretary of State by the licensing board, State Board of Accountancy, State Board of Medicine. You know, here we have the Supreme Court. That is what governs Colorado attorneys, Colorado Supreme Court, not the U.S. Supreme Court. So, all right. So we might have to create a professional corporation or a professional LLC. So all these entities can be taxed as an S corporation, can they not?
They can.
They can, yeah. So we're good. If we have 2 members in an LLC, now what happens, Joey?
It depends.
It depends. Okay.
I could say that all day.
Yes. You have to rub your chin too.
Yeah.
Look off in the
It
distance, even though you have
depends.
the answer.
That's right.
It depends how you're trying to split the profits, because in an S corp they've got.
Well, before we get that far, that's crazy talk. I mean, that's good talk, but that's way ahead right now.
We're gonna start an LLC.
Yeah. Just talk about what happens instantly when you add a member
Oh,
to your
right.
LLC. Yeah.
So if we're talking LLC, once you add a member, you automatically become a multi-member LLC. So you automatically have to require a 1065,
Which is a
partnership tax
return. Right.
You know, obviously depending on which state you're in and who that member is. Though.
Okay, let's talk about that for a second. So people commonly will come to us and say, hey, myself and my spouse created an LLC for our rental. Okay, no big deal. What happens though? So we have now a multi-member LLC.
Right.
The IRS says now this is a partnership. Okay. Must file a partnership tax return, which is a Form 1065, as Joey said. But it depends. So let's talk about why it depends. Tell me about when you can get away with filing your multi-member LLC on a Schedule C or Schedule E.
So if you are in those common law, Spanish
Community property states.
community property.
Yes.
See, it's one of those.
Yeah.
The Spanish law states. Then you can choose to be a multi-member LLC or a single-member LLC if you and your spouse own it jointly.
Right.
Because in those states, you and your spouse are one person.
Okay. I agree. Alaska, are they community property?
It's up to, I think you can make the election.
You make
in
the
Alaska,
election?
yeah.
Okay. All right. Well, Alaska notwithstanding.
Right.
Yeah.
Hard to
Let's
say.
just kind of run through the states. We have Washington, then we have California all the way through Arkansas. So basically every state that borders Mexico, because community property comes from Spanish law.
Yes.
Idaho just felt pressure from its buddies. You know, so Idaho, so we got Washington, Idaho, California through Arkansas, and then we got Wisconsin, which is my home state. I don't have any clue why they're a community property state. You know, they vote blue all the time, you know. But anyway, yeah, they chose to be different. So those are the states where you can be a multi-member LLC, yet elect to have it file as if it was a single-member LLC.
If owned jointly by your spouse.
Yes. Thank you. And that's going to go on Schedule C or Schedule E. Now, you could also file as a partnership return. Nothing says you can't. Why would you think you'd want to file an entity as a partnership, even though you might have the option to not? What do you think?
Well,
do you have any ideas?
Well, I mean, one thing, the partnership does give more structure too. So, you know, within the operating agreement, you can arrange how you want things to be handled, you know.
Sure.
What percentage you want one person to get versus another person.
Typically, your spouse, though, is not going to, you know,
typically.
So he might be viewed as one
right
at home and not just legally. But think about audit rate.
True. Yeah.
Okay. So what's the audit rate of a partnership return versus an S Corp versus a Schedule C or Schedule E 1040 tax return? Do you know off the top of your head?
An S Corp is like 0.4%.
It is. Yeah. 0.4.
Yeah. And
partnership, want to guess?
More than that.
0.4.
0.4. Okay.
Yeah. So both of those pass through tax returns enjoy, if you will, I guess. Enjoy is a good word. A similar audit rate risk. So you have a rental, let's say, with a bunch of travel, auto expense, and all that stuff. You know, the partnership return is going to enjoy a 0.4% audit rate, whereas if you put that onto a Schedule C or Schedule E with those big low-hanging fruit categories like travel, auto, you know, all those things the IRS hates, right? Maybe your audit rate risk jumps up. Not saying that we're doing anything incorrect, not saying that you don't have the documentation to back it up and all that stuff, but why defend your innocence if you can just maybe do a tax return that cuts the chances of being scrutinized down from, let's say, 2 or 3% to 0.4%.
Yeah.
That's a big deal, right? So even though you might be in Washington, Idaho, California through Arkansas and Wisconsin, you might still want to file a 1065 tax return, a partnership tax return for your multi-member LLC, even with your wife or your husband, simply because you just want less scrutiny.
Right?
Yeah.
Makes
fair
sense
enough.
to me.
And, if you look at the cost of that, let's say our fee is $800, that's 2019 in case somebody listens to this like
Right.
20 years later and quotes
Only $800.
Yeah. Used to cost an arm, now it's an arm and a leg. But we, that might be cheap insurance for some, for some folks who don't want to have the scrutiny. And, some people are once bitten, twice shy. They're like, I've been audited. That was a nightmare. I came out of it okay, but it was like days of anxiety,
Yeah.
So you can either pay us or pay your therapist to get over it, right? So, all right. So that's cool. When would we want to add in other members? When do we want to add our spouse? Do you have any suggestions there?
Spouse, children. So the spouse, adding them in would definitely be if we want to open a 401k for them. If they need earned wages.
You can simply
for
hire
that.
them though, right? You wouldn't necessarily have to put them on as a part, unless because you could just run payroll on them if you wanted.
Oh, adding a member.
Yeah.
Oh.
So not really. Yeah. Think
Not
about
hiring.
the payroll aspect. Yeah. There's not a lot of good reasons.
Yeah.
Okay. Yeah. So it's a
was
trick
like-
question.
Not
Sorry
a
for
ton?
stumping you,
I was
Joey.
like, am I supposed to know this one?
Yeah. There's a whole concept called charging orders. When you have two members, let's say Joey and I are in business together, and Joey does some nefarious things, which you're prone to do.
Joey.
No, Jason.
No, you're not.
Goodness.
No.
The whole world's seeing this. I suggest coming clean now. No. So Joey does some things that gets him in trouble, financial trouble, and he gets sued and he loses and he gets a judgment against his interest in the LLC. Well, I shouldn't necessarily get penalized for Joey's bad deeds. So I can go down, or I should say the person who holds the judgment on Joey would go down and get charging orders, meaning, okay, look, when distributions are given out, I'm going to take my share in lieu of Joey's judgment, and that's not going to affect me.
Right.
And there might be some other reasons along those lines. Some attorneys, like here in Colorado, some attorneys will build LLCs between husbands and wives as 81-19, 81 whoever's the primary operator, and 19 being the supplemental investor or member of the LLC, just to create an extra layer to their onion, make it a little bit more challenging, if you will, to maybe get a judgment against one of the members over the other. That stuff is legalese. We're not attorneys. We
Right.
just are parroting what we've heard other attorneys say. But at the same time, those are some reasons why you might want to add a spouse, just because the lawyer thinks it's the best idea for whatever work that company is going to be doing. So, adding children, right? We can certainly start to build a legacy. We can certainly start to transfer our legacy to our children sooner by having them be members now. Same with your parents. We can do that as well, right? We can say, hey, Mom, instead of me making $1,400 to give you $1,000, let's make you a member of my business as a passive investor, completely legitimate, all that stuff, and we'll just pay you distributions. Now you're only going to be taxed at your tax rate. I'm not having to pay taxes on money just to give it to you. So those are some of the reasons why. We only got a few minutes here. Let's quickly run through, Joey, some of the benefits of an S corporation. So you're making the assumption that this LLC now is operating in let's say it's just a single member LLC, just a consultant, engineer, doing his or
and
her
not in
thing.
California.
And not in California.
Right.
Yeah. Oh, come on. California's all right. We love California. So tell me, when you're just a garden variety LLC, how are you taxed?
So you're taxed at 2 levels. Obviously, there's
Two?
Yeah. Is there an echo on this? Yeah. There's
Sounds terrible.
You're taxed for your income, but you also have to pay that self-employment tax, which can
What is
really.
this self-employment tax you speak of?
The self-employment tax I speak of is not only your share as the employee of Social Security and Medicare, but you also pay the employer share of Social Security and Medicare, and it's 15.3%, and it's based off the net income of your Schedule C.
Okay, so your LLC makes $100,000.
Yep.
And
Some good money.
and let's say you're in the 22% tax bracket for income tax. What's going to be your essential marginal tax on your business then? 22 plus 15? You're saying that we would have 37.3% taxes. So I make $100,000 and I have to pay $37,000 of that in taxes.
It's the cost of being your own boss.
I'm going to Canada.
That was some quick
Canada's
math.
got to be better.
I don't think
I
so.
don't think so either.
But,
Sorry, Canada. We
Colder.
love you too.
But
But,
I mean, the
yes.
S Corp does help to.
Yeah, we'll talk about that in a second. So that's the problem though
Right.
with an LLC is you're taxed at 2 levels, like you said. So income tax is unavoidable, right? I think you said it before in one of your videos, even
Right,
where he's like,
right.
"Hey, how do you avoid income tax?
Well, you can work less, you can spend more.
Work less or spend more." Doesn't sound like that's a good idea. We always want to make more and spend less, right? So okay, income tax is going to go up, but how does, let's say we take, now we'll get into the meat of the argument. Let's say we do take this LLC and we want to have it taxed as an S corporation. So real fast, Amanda,
Oh boy.
does an S corporation exist?
No.
Can I go to the Secretary of State and say, I want to file articles of S incorporation?
No, it's not a thing.
It's not a thing. Okay, so it's a tax election.
It is.
Right, so we take an underlying entity, LLC, and corporations
Corporation.
are probably 90% of the S corporations that you see out there, right? Okay, so Joey, tell me about this $100,000 example now. So before you told me I was going to pay 37.3%, which is
Right.
15.3 plus the marginal rate of
22%. Mm-hmm.
How's it change with an S corp?
So with an S Corp, you actually only have to pay, the self-employment tax portion on the amount that we deem your reasonable compensation.
Okay.
So if you have the 100,000 and we determine that 40,000 is your reasonable compensation, then you
Okay.
only have to pay that self-employment tax on that 40,000. But the 100,000, like we said, is still subject to that income tax.
Correct. Okay, so income tax still remains unavoidable unless you
Spend more or work less.
or work less. Yeah, both not desirable. So
Right.
okay, so you said self-employment tax. What is
Correct.
that in like payroll land?
So self-employment tax and payroll land is, we kind of say them interchangeably,
We do.
but it's going to be Social Security and Medicare.
Okay.
6.2% for Social Security, and then 1.5 for Medicare.
1.45. Yep.
Mm-hmm.
Yeah. So combined, that's 7.65 on both halves, the employee and employer. That's where your 15.3 comes from.
Correct.
So yeah. So when we pay a salary of that 40,000, we're still paying. I'm gonna do air quotes for those listening. We're still paying self-employment taxes. We always call them something different. We call them Social Security and Medicare taxes.
Sure.
Mm-hmm.
Okay, so that's the 40,000. How about this other 60 grand that you take out? We call that a distribution, and we got a lot more discussion about what that means.
Right.
Oh yes.
But tell me how that $60,000 is going to be taxed.
So the 60,000 is going to show up on your K1, and you're going to actually report that on your personal return. So that's only going to be liable for income tax.
Income tax. Okay, so the 60 grand, just so we can kind of like tie it all together, the 60,000 before S Corp was also subjected to the SE tax.
Right.
Correct.
Plus the 40,000. We say, okay, let's S Corp this thing. Now we carve out a portion of the income that's going to be taxed at the 2 levels. And then the rest of it's only going to be taxed at the income tax level. So, Joey, in your experience, let's say that $100,000 LLC, how much are they saving by doing this S Corp in your experience and what you've seen?
Yeah, in my experience, it's usually around 8 to 10%. So
8 to 10%. So quick math, 8 to 10% of 100,000 is
$8,000 to $10,000.
8 to 10 grand. Even in Canada, that
Well
math
done.
still works. Yes. CPA, right? Certified private accounting.
Right.
I don't want to do math in public. No. So anyway, so that's the benefit, right? And does that 8 or 9, 10%, or that 8 to 9 to 10% translate into higher incomes? And the answer, it doesn't, right?
No.
But we still have a lot of meat there on the bones, like just real fast examples in our experiences, because we do S Corps all the way up to multi-millions.
Right.
We had one where they had $1 million of net income, all on Schedule C. We S Corp'd that individual. We still paid him $300,000 as a reasonable salary, and they still saved $30,000. So what was that savings all based on? So they exceeded their Social Security wage
the
base.
Medicare savings.
Medicare. Yeah, that's the thing that people don't realize sometimes, that Medicare goes on forever. Not just forever, but forever and ever.
Yeah.
In their perpetuity, right? So that example, there was no Social Security savings. It was all a Medicare savings. But as we have learned and what we discussed is that a tiny number times a really big number, your 2.9% plus the surtax in that particular case ends up being a lot of money.
It adds up fast.
Exactly. 3% doesn't seem like a lot until you times it by $1 million.
Yeah.
So anyway, $30,000 savings for that individual. It's your, I think, right, but also your obligation as a citizen to minimize tax, right?
Yeah.
And that was a good example of how we did that. So anyway, what other benefits, as we wrap it up, we only got a couple of minutes left, what other benefits do you guys see with having an S corporation?
Well, we talked about the lower audit rate.
Yeah, and that is a tiny ancillary one off into the distance, right? So does this S Corp give you any magical extra deductions?
Unfortunately, no.
Unfortunately, no. Can you do a 401k in an LLC?
Yes.
Yes. Can you do a 401k in an S Corp?
Yes.
Yes. Okay. Can you buy a car in your LLC, I think?
Yes.
Can you buy a car in your S Corp?
Yes.
Okay. All right. Home office?
Mm-hmm.
Yes.
Okay. Oh, shoot.
I
So
know.
any deduction, can you deduct business meals in your S Corp?
Yes.
Yes. Okay. How about your LLC?
Yes.
Yes. Okay.
Yes.
So there's no other benefits?
Not really.
Except for this $8,000 or $9,000 or $10,000.
Yeah. Or maybe 30,000 if you're in a higher bracket.
Yeah.
Plus, it just sounds cooler.
It just sounds cooler, yeah.
Yeah.
You go to the parties, you're like, I have an S Corp. And then the person goes, I have an LLC. You're like,
Like,
Yeah.
Yeah.
Mm.
No one wants to drive up to the party and say, I have a disregarded entity.
Yeah.
No, that just doesn't work. It doesn't work.
All right. Well, thank you, everybody. We kind of went through entity considerations, location, LLC versus corporation, all that good stuff. And we also kind of touched on some of the benefits of S corporations. We're going to have other podcasts. One of the ones coming up is, does an S corp make sense? And we'll talk about that in a different one. How the formation works, how the S corp, I shouldn't say formation, how does the S corp election work? How does a late S corp election?
Oh, that's a good
Amanda,
one.
how many late S corp elections did you do this year, you think?
Oh, God. Over 100.
Over 100. All right. So yeah, we do them a lot. And it's very common. People freak out in March. They want to
Yes.
go back in time and engage in revisionist history. So we can do that. So anyway, thank you to all of our listeners. This is our very first podcast. God, I hope this works, because we talked a lot of good stuff here, and I want to make sure this gets down on tape. We're also videotaping this too, so we're going to wave to our YouTube viewers, and we thank you for your time. Thank you.
Yeah. Thanks, guys.
Oh, I should probably do just a quick goodbye.
You should.
Jason Watson, Watson CPA Group, Amanda Rowles, and Joseph Bassett. And we thank you. Come visit us online, right? WCGInc.com. You can also download our book where we discuss a lot of this stuff. You can also give us a call. You can talk to Amanda.
You can.
You can talk to Joseph. You can talk
Please
to
do.
me. You can also email us, and we'd be more than happy to help you out. So, all right. Thank you.